A $7.5 million trade on TEVA Pharmaceutical, ticker symbol TEVA, was just detected on April 29th. And in just a few days, May 7th, TEVA Pharmaceutical reports earnings. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying or bearish and selling before earnings. Because as we all know, the rich have more access to exclusive research and information to make better financial decisions. No wonder the rich keep getting richer. And so without further ado, let's dive into our data analysis and then show you how we are trading TEVA Pharmaceutical for earnings. As we can see here on the options time and sales tape, April 29th, at the same time here, these 4 options were being traded. All of them are December 19 options, 21 strike calls, 11 strike puts, 14 strike puts, and the 17 strike calls. Now, it is not only 1,000 contracts, because if we start to scroll down on this tape, notice how there are multiple trades happening for those same 4 options throughout the day on April 29th. There's actually quite a significant amount of contracts being traded. And to show you how we are trading this, understand that back on April 21st, before TEVA Pharmaceutical started this winning streak here, we had already detected an unusual option activity on this day. And you can see here, this was the email that we sent out when we detected those unusual trades on April 21st, alerting our members that we had found these TEVA options for the September 19 at the 14 strike calls, 15,000 contracts for a price of $155. And so we got into that position, and you can see how much these are now worth by looking at the option chain for these September 19 options. At the 14 strike calls, you can see here, they are now worth $279 to $297. So nearly doubled the price in about a week. And we can still see that there were at least 15,000 contracts that are still opened. And so you can see that the trade right now has a profit of about $134 per contract, because they were initially going for $155 when we detected those. And so what we did was we closed out and took profits, locking them in and rolling to a new strategy now. Those $134 of profit have been now rolled into these December 19 options at the 17 strike calls. You can see our position here. Green means buy, and the 21 strike calls. Red means sell. And so we bought these call options and sold these call options. And notice that the price is a debit of $111. But since we had a profit of $134 and this new trade cost $111, we actually have a credit of $23 per trade. And so our trade is not a debit. We are essentially using our gains to stay in this trade. And so notice that this trade is now a no-risk trade going into earnings, because if the stock goes down, there is no negative loss anymore. We've locked in $23 of profit per contract, while at the same time, if the stock goes up, we can continue to make more profits. So that is how we trade with our membership, where we reduce our risk, especially for earnings trades that have higher risk. If you want to get access to our emails, our daily alerts, and our video analyses, make sure to go to our website. We'll put a link at the top here so we can all get the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now let's take a deeper look at their trade, because they did not just trade call options, because they also traded put options. And how many were they trading? Well, notice that we have 25,000 open contracts for those 4 unusual option trades on the put side and the call side. And so, quite a significant amount of contracts being traded. And we know these were all new opening trades because if you look back at the historical data before those trades were made on April 29, you can see on April 28th, for these December 19 options at those strike prices, take a look at the open interest. Not even over 1,000 contracts for both the put side and the call side here. And so we know those 25,000 contracts are new opening trades. And based on our analysis, they sold the 14 strike puts and bought the 11 strike puts, selling a bull put spread, collecting a premium of $90 of credit per contract, and using some of that premium to finance the call side, buying the 17 strike calls and selling the 21 strike calls. And so this is what their trade strategy looks like. And so when we analyze it, you can see here on the risk profile that this 4 option trade is also a long bullish trade. As the share price goes up, this trade becomes more positive profitable. And we can confirm that this is bullish by looking at the Greeks. We have a positive delta trade. Now, why do they want this type of strategy? Well, notice the advantage here. We have a theta that is very close to 0. So there is no time decay on their trade. They also have a negative vega, which is very good for earnings because after earnings, the volatility will go down. So this is advantageous to their strategy. But to put on this type of trade, it does require a lot more buying power because they sold those bull put spreads that are $3 wide, which means each of these contracts costs $300 of buying power. And so we can calculate the total cost of this trade, 300 multiplied by the total contracts being traded, 25,000, and we get a total of $7.5 million. So quite a significant amount to be trading before earnings. And so that is why we use position sizing to manage our risk by using this vertical call spread strategy, which has already been managed into a risk-free trade where we have a better risk to reward ratio because we do not have risk on this trade. And we were only able to do that because we followed the data back on April 21st when we detected those unusual options. So if you want more of these unusual trades with a lower risk and a higher probability of profit, then go to our website. We'll put a link at the top here. Let us know in the comments. Do you think TEVA Pharmaceutical will go up after earnings, or do you think it will crash down? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.